some analysts, Victoria, are predicting that oil prices can only continue to go up and could hit that $200 by the year end. Do you think that that's likely that it'll hit that mark?
Thank you very much for having me. So the issue of oil prices right now, it's very unpredictable. But what we can be sure of is, yes, there is a likelihood of oil prices hitting $200 per barrel, especially if the geopolitics between Russia and Ukraine is not really settled. But most importantly, the reason as to why we are seeing an increase in oil prices globally, not only in African countries, is because of the comeback from COVID-19, the economic recovery. Because initially, when countries were in lockdown, the economies weren't operative, so there was no demand. But right now, all countries are operating, even including African countries. In Uganda, there are no lockdowns. In Kenya, there are no lockdowns. So there is high demand for oil, and yet the supply is not there. And this has been escalated by the geopolitics that is including Russia and Ukraine, and the lack of oil supply globally. Because right now the demand is very high, but then we don't have enough supplies. And this is likely to be escalated, especially if there's no level playing field on how to handle the Russian crisis or the Russian and Ukraine crisis, and how to control the energy sector as a result of that geopolitics. So it's very likely that the oil prices can hit $200 per barrel. And I would actually agree with the estimates, but it's all about striking a balance right now on handling how really countries are going to respond to this crisis, and whether they can continue relying on the Russian oil or they're going to continue with the sanctions. So whatever is happening geopolitically, it's likely to affect all countries, including African countries.
So what we're also seeing, though, Victoria, is that even Africa's largest oil producer, Nigeria, is being hit really hard by these oil prices. What are some of the key obstacles preventing oil producers in Africa to mitigate the impact of these high oil prices on their own economies?
So initially, there was a lot of the investments in the oil and gas sector, first caused by the COVID-19 pandemic due to lack of demand, but also most importantly, in the last 2 years, or even the past 3 years, we have seen lots of the investments in the oil and gas sector because of the move to transition to a low carbon economy, because of the climate change activists. So there weren't enough investments in the oil sector, and also in the shale gas sector in the US. So right now, even if the oil producers, they have the oil, initially there was no investment, so they didn't invest a lot, and this is now catching up with us right now. That's why you're saying like even Nigeria or even other oil producing countries, they're still struggling. And remember, right now it's an issue of energy security. All the world leaders and the big economies, they're more focused on securing oil for their countries. So you might find that even if like African countries that have oil, they might actually opt to export that oil to other countries, the bigger economies that can give them high price. Because right now everyone is really more focused on securing whatever oil they can get. So this global energy crisis and the high prices we're seeing right now is not something that has just happened. It is something that has been building up due to the ineffective policies we're seeing in the past 3 years or 4 years, and also the shock from the COVID-19 and the COVID-19 recovery, the economies. So all that has been building up, and it has been
Victoria,
exaggerated.
we're running out of time. I just want to ask you one more question real quick. In your view, from everything that we've discussed, do you think that companies should be hedging against possible higher prices than what we're seeing right now?
Sorry, I beg your
I
pardon?
wanted to ask you if you think that, considering everything that we've discussed right now and this projection that we might see oil hit that $200 mark, do you think that companies should be considering hedging against oil prices at this point?
They can consider it, but right now it's a bit beyond the capacities of companies themselves. Because right now it's an issue of having all the relevant stakeholders coming together to control the oil prices. OPEC OPEC, for instance, would have a big role to play, especially on ensuring that they put enough oil on the market. But companies right now, there's not much they can do because it's beyond one stakeholder, it's beyond one company or even a group of companies. Like the situation is beyond us, but rather countries and especially OPEC, the organization, would really have a lot to play to ensure that the oil prices go down.
Thank you so much for all that, Dr. Victoria Nalule, the CEO of Nalule Energy and Mining Consultants.